Hello SKYTRADERS, welcome back to a new video of the weekly recap. This is me, your trading coach, and in this video we're gonna discuss and go through the chart of Solana USD. As you can see clearly in the chart that Solana lost almost 97% of its value since peaking back in November 2021. And also has shed 16% of its value over the couple of past days, and continuing its recent string of losses and falling out of the top 20 coins by market cap. A lot of this was because of SBF's collapse, FTX collapse, and due to the current market conditions. And it also dropped as low as $8.17 per coin back in 26th of December. And a lot of things happening to Solana. It's even rebounded from around $8.3. So it's now 16% over the past day. That brings its 7-day drop to nearly 32% and 2-week decline around 41%. So overall, Solana lost nearly 97% of its value from $260 back in November 2021. And also dipped to just over $3 billion in total of market cap. So a lot of things happening to Solana. We're gonna discuss a lot of fundamental stuff and a lot of technical stuff. What's our view on Solana and how you can analyze them. So without further ado, let's get started. What we usually do is a top-down analysis. So on the weekly time frame, we see lower highs are created, right? Breaking the market structures, trading back. And if you want to consider it from wave theories, so this is a corrective wave. This was the impulsive wave back from the start of Solana, and now we're doing the corrective wave. We have expansion, retracement, expansion, retracement, expansion. So you can consider this as a wave 1, this is a wave 2, and this is a wave 3, this 4 and this 5. And as you can see, the wave or the longest wave is the wave 3 because it usually is. And from price delivery condition, let's remove these drawings to make it more clear. You can see expansion and then retracement back to around 50% Fibonacci retracement level. And then another expansion, another retracement back to another 50% Fibonacci retracement level. Another expansion, and now we're having consolidation. We're having consolidation, a really important level, because this level actually where Solana exploded from back at 19th of April 2021. And now we dip even below this level, taking out all of the liquidity. So this candle is needed actually, because if you need to take out all of the liquidity setting below these kind of levels, so you have to have a high pressure sell candle taking out all of these buy orders or stop losses of buy orders. Now we're doing slight consolidation over the past couple of days, and it's still on the weekly time frame. Nothing is obvious, but this is also a very important level because this was the first initial explode of Solana. So a lot of orders, actually a lot of huge buy orders with high volume were placed back in 15th of March 2021, and this is the level that we are trading at right now. So is it a possible order block? Could be. Let's drill down to the lower time frames to see possible rejection areas. So on the daily time frame, let's remove the drawings. All right, on the daily time frame, we consolidated, we dipped below to take out all of this liquidity sitting below this area, And now what we're waiting for. If we need to see another expansion or explode in the upside, so what do we have to see? We have to see a high pressure, first of all, a high pressure buy candle breaking this market structure and taking out all of this liquidity. You can see a possible retracement in here, creating a higher low, and then another high pressure buy candle taking out all of this liquidity in here. Then we can see a further retracement, and then we can see another expansion up to this level. Then from this level, we can expect a lot of stuff actually. We can expect another dip, then we can have the huge expansion in the upside, or we can expect slightly consolidation with a slight retracement, then expansion to the upside, up to the next liquidity area, which is this area exactly. All right, so on the 4-hour time frame, how we can see this? We can see that once price dipped below this level around $8.14 per coin, we had a high rejection, and then we had an order block from here, retracing back but creating a higher low with another high pressure buy candle breaking this market structure with another higher low, and now slight of consolidation. So it's a local consolidation inside this bigger wave or possible wave. So if we need to see this wave completed, we have to see another high pressure buy candle breaking this market structure and reaching out to this next liquidity hunt. This is possibly to happen today or in the next couple of days. And then once we take out all of this liquidity, we can have another higher low and then expand further to the upside. On the 1-hour time frame, what do we see? Right, so it's a fine tune of our entries, right? When price rejected back in here, traced back to 50% or below than 50% Fibonacci retracement level, and as we know, market makers buy at discount price, high pressure buy candle breaking this market structure, consolidating, taking out all of this liquidity and liquidity hunts. Now we're consolidating on the 1-hour time frame. This is a really tricky area because on the 1-hour time frame, a lot of sell orders are placed in here. So we need to see either a rejection from this area, breaking this consolidation to the downside, so we can see another dip, and then we can see an expansion to the upside, or we need to see a high pressure buy candle taking out all of these orders and even reaching out to this next liquidity hunt. This is on the 1-hour time frame. Let's also integrate some of the indicators because some of you for sure loves to see some indicators on the chart. However, I'm not a big fan of indicators, as you usually know. But let's, for example, type the moving average convergence divergence. On the daily time frame, right? So on the daily time frame, you can see that now, or in this level that we are trading at, both the fast and the slow indicator are crossing each other, and the histogram is nearly around 0, so we can expect an explosion or expansion or divergence from this level. Again, this divergence could be on the uptrend or the downtrend, but most likely it's going to be in the uptrend. Similar to what happened in here, similar to what happened in here, and so on and so forth. If you want to see another indicator, for example, let's type the stochastic indicator. And as you can see, during this level, we were at the oversold area, as retail traders call it, and we're moving now towards the 50%. And the 50%, again, whenever I use the stochastic, I don't use it a lot of times, but whenever I use it when this line passes the 50%, so it confirms that price have more and more potential to go in the same direction, whether it's uptrend or downtrend. So I combine this to have like more of a confirmation on my buys. But again, I don't use indicators to trade alone. So as you can see, now we're reaching towards this 50%, and price is ready to explode even more in one of the directions, right? Cool. On the higher level or the higher time frames, you can see that we already formulated the first wave, second wave, third wave, right? And now we are even more ready to either start the corrective wave to reach the all-time highs again. This could happen in the ideal scenario, that no more collapses in any kind of the big exchanges, no more, for example, regulations from big countries on crypto, no more bankruptcy of big exchanges or big wallets, crypto wallets. So in the ideal scenario, this should be the case. But if anything extraordinary happened, we could see another collapse of Solana. So trade safe. These times are really critical, especially for Solana and for the crypto space. And don't over leverage your positions, and try to do proper risk management. Thank you so much for watching. This is Mina, your trading coach, and this is your weekly recap by SkyTraders Trading. See you in next videos.